All right, let's take a look at the markets this morning. We've been since midnight. We've had 3 buy setups that has hit our trend zone. So our trend zone buy happened pretty much right before midnight, and then right here at 4 o'clock in the morning, and then we just had a buy set up at 10 till 7. So we all know that. From the previous videos that we've done, that we like to use our trend zone to capture the correct move in the market, meaning we're trying to get the correct trend so we can buy the retracement inside of the zone. So we're looking for the market to pull back. So if we are green, if these parallel lines are green, meaning our trend zone is green, it loves to reverse price. So the price likes to get inside of our trend zone. And then we see a yellow trigger candle that came in here, and then also here for a continuation to the upside, continuation to the upside. So we had one just before midnight, one here at 4 o'clock this morning, and then one at 10 till 7. So that being said, that's our parallel trend zone. If it's red, we're looking to sell retracements. If it's green, we're looking to buy retracements. And you can see how it runs beside each other. We've had no sell setups at all. That's how wrongly positioned traders get caught. They get on the wrong side of the market, and that typically leads to counter-trend trading. So that being said, we look at the next zones. The other zones we look at are the liquidity grab zones. Now, this is market structure. So if you notice that our zones move up with price when they're green and move down price when they're red. So you can see that the zone will move up in price, and so on, and it'll follow price as it moves up in price, and so on. So just follow price up. That also creates an opportunity to find out where the market's going to pull back and a possible reversal. So this one, if you look, not only did it get inside of our trend zone, that's why that yellow trigger candle fires. Consequently, it also got inside of our buy zone, the start 25 buy zone. This is called a confluence trade. All right, the confluence trades are one of the top setups we have in the trade room because you're getting inside of our liquidity grab. It's pulling back, the market's grabbing liquidity, and it's finding a new level. And the next one is just a pure buy zone. It got inside of our buy zone, reversed. So as you can tell, the market loves to reverse inside of our buy or sell zones when it's red or green. So we use a 1-135 in the room, meaning we're looking for a 35 tick reversal. But you can change that to 1-130, 1-125, 1-120, 1-112, whatever you need to do. You're just going to get more triggers inside of the zone. But these zones they do not repaint. So you can lower the reversal candle if you would like. Now, when are the best times to look for these setups, and when are the optimal times in the market? So when we're looking at order flow, as long as we stay above the line in the sand, our market structure. So this is market structure. The low of these zones, each low here, low there, low, that's market structure. That's your line in the sand. So if we ever start closing below that zone, I did a video on this, how you can look for a liquidity grab back into that zone, look for a short. That's when a possible reversal can happen in the market and you turn red sell zones. Until then, the market's up. So our line in the sand as of right now, or the market structure, is 67.19.5. You can see the right side margin. It says exactly 67.19.5. So that is our major support in the market for the day so far. If the market keeps moving up, this will move up. Market structure, as you can tell, keeps moving up from 4 o'clock this morning. Moved up there, 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 there. It kept following the lows. So market structure is sitting at that level right now. But what also is very important to understand is, where is the market? Is it balanced or imbalanced? So when you have market profile and you have a high and you have a low, so this is the bell curve. Okay, so here you have the control point somewhere in between. All right, so there's market profile. So what happens is, if you get the market to break out, so that's control. So here's high value, low value. So the market's balanced, and what the market will like to do is it'll like to stay in between profile. Comes to the high, gets a reversal, comes to low, gets a reversal. You're in a balanced market. You need to sell the highs, buy the lows. Okay? So that's balanced. What happens if you get outside of market profile, that's when these liquidity grab buys really come important. Then the market comes imbalanced. The market will like it do this. It'll come outside of it. Now we're imbalanced. So when you get imbalanced, what the market's trying to do is trying to find the next fair value area. So it'll find the next fair value area, and it likes to do this and come up. The next fair value area is typically the previous market participation, which will be the control point on the previous day. So if you have a control point over here in the previous day, resting up here, then this will be your target on the imbalanced market. So that's how the market works. It likes to get balanced. If it breaks out a high value area, it gets imbalanced, and it needs to find the next fair value area. And it will work its way up into the next fair value area by finding the previous market profile participation, which is the previous day's market profile, or previous last couple of days market profile. You just go back and move it on. I'll show you how to do that in a second. But what happens if we're outside of profile and we come back inside of HVA? Well, then that's called a mean regression. The mean regression to market profile, you break down. What's what we call a failure trade. That's how the market works every single day, every single week. You come back inside of it. You test a high value. They sell it off. And what's your target? Control point would be your first target. That's the safest target. But typically goes coast to coast, which I call coast to coast ever since we opened the trading room. And the market likes to move all the way back down into that level. So this is how the market works. Vice versa, if you break low value area and it gets out of balance again, then it will try to retest that balance on the pullback. That's when we look for these liquidity grabs, the yellow trigger entries or the breakdowns. And then we see it trying to find the next fair value area. The market's trying to find fair value. You look where the previous market participation has been on a market profile. Typically, it's a control point. So let's say this is a control point. Then the market likes to move down and find fair value at that level. Vice versa. Let's say you've been outside of low value area and you come back inside a low value area. That's called a mean regression. You come back inside, then you retest. That retest, you want to look for long. That's when you typically see these go long. And then you see the market move up to first target would be the control point. And then the final target would be your high value area. So every single day on every single market, these are the situations you're going to be in. You're either going to be balanced, where the market is balanced, it's found fair value on the bell curve, or it's going to be imbalanced and it's trying to find the next fair value area, which will be the previous market participation, which is our previous market profile. So there's imbalanced. Now when it's imbalanced, it likes to break out, retest, and go to the next control point. It's where the most volume is traded to find the fair value. If it breaks outside of it, it's going to try to find the fair value to the downside. And this is the imbalance market. So that's a summation how market profile works. It's been out since 1985 by Peter Stoudemire. But this is a scenario you're going to get every single day, every single week, in every single market, because it's not my opinion. It's not your opinion. This is 100% order flow. Where are the market participations? If we break outside, so this blue is the market balance. The red is where it gets imbalanced. So if it's blue, it's just going to go back and forth. You sell the high, buy the low, sell the high, buy the low, sell the high, buy the low. Until it breaks out, you just sell the high, buy the low. The first target's a control point. Second target is your HVA. It goes coast to coast. But once you get outside of value, the market has to find fair value. So where's it going to go? It goes on the previous market participation, which is typically the control point of the previous day. So that's how the market works. So then what do we do? When you see these buy signals come down these trend zones, if you're outside a market profile and you're in an imbalanced market, what's the market going to try to do? It's going to try to keep buying these retracements to find fair value. That's what it's doing right now. The market structure's up. It keeps buying retracements to find fair value. And that is how the market works on a day-to-day, week-to-week basis. You have this bell curve of all this market participation today. In fact, I'll show you how it works a little bit this way, just so you understand. Let me see. There we go. One second. All right, so what you have this bell curve over here. So this is profiling the market all morning. So you got your low value area here, your control points are yellow, your high value is a high value right here, right? So what we can do is not only, and I'm going to leave this in the room, guys, for you on top of the structure so you can see, you understand how this works, market structure. But what I like to do, I like to find out where the low volume nodes are in the market. What does that mean? If I look at this bell curve right here, if I look at the bell curve from here to here, from this morning, it's profiling the market since midnight. Where can I find the low volume node? The low volume node is found right there. The lowest volume was right here on yesterday's HVA. This is a low volume node. Now take everything that I just taught you, remember that, right? On market structure, breaking outside of value, inside of value, so on. So that level is the lowest volume this morning. That's called a low volume node. So if I take that and I put it right over top of that and I click on it, and I'm going to make this red so you can see it. And you start understanding this and you start doing very, very well with my system because you understand how market structure works. And let's put this in blue. So if I come up and I look at this low volume node that came up, and let's look at this price action on this buy signal at 6:48 this morning. Look how the market broke out of the low volume node and came back down and retested exactly in the low volume node, right almost to the tick, and then took off. So what you can do is you can use market structure by letting us know, A, when you're getting inside and outside of value, right? These are buy and sell points. That's a sell. Getting back inside, that's a buy. We have traders that just subscribe to our system just for the market profile. Works so well on projecting the market. Here, break outside, right back inside. Replay this video and you'll understand market structure, guys. These are all buy and sell points, right? But look at this. This is the low volume node. So this is the bell curve. This is all the volume in the market. This is profiling the volume profile. So all the volume in the market right here. Look how my system picks it up. Look how my system picks it up right inside of my trend zone, right in the low volume node. Now you don't have to use a 135. If you want to break this down and use a smaller Renko, since you know that low volume node should reverse price, here's a 1120. You're still going to get the yellow trigger entry right there. You're still going to get the yellow trigger entry right there on the low volume node. There's your entry. It's just a little bit more choppy, right? I use the 1135 because it's not as choppy. So what's the market do? Comes right up to high value at 67.41. So what am I going to do at 67.41? Here's what I'm going to do at 67.41. Or what am I going to do at 67.16? What I'm going to do, I'm going to see when they're going to try to grab liquidity. So I'll leave this extra market profile inside on here since I'm teaching you how to do this technique. Then you'll have our profile and this additional profile so you can read the price. But let's say we break out of 67.41. Well, I'm already above the control point and this would be the high value area. So what I just teach you this morning, I just taught you how to look for a break, retest, continuation. It's going to try to find the next value area. So what we'll do, let's get this down. We'll look for a breakout above this high. We'll look for the first retest. And we'll look for a buy signal. And then where will the market try to go? They'll try to go to the next fair value area, which will be a previous market profile level. So if I scan this down, look at market profile levels, I need to find a previous market profile level, which will have to go in a higher time frame to find because the market's been setting new highs. But you see my point. Now, one of my favorite trades is when we get outside of value and it does a head fake. We'll do this. You'll get outside of value, start moving back and forth. We break out into a favorable imbalance market. It'll go sideways, up and down, but then it breaks right back inside a profile. Love this trade. Breaks back inside. So what's your expectation? You look for the first retracement right up to 41. What's your first target? Always the control point. There's your first target. And then it likes to go coast to coast all the way down to 16.5. Okay? Vice versa. What if the market does this? It gets outside the low value area. You break a little bit on low value. But then it comes back up and doesn't stop there. It comes back right back inside of it. You know they just grab liquidity. Look for the first retest. Look for the market to go up. This is how order flow works, guys. Your first target's control point. Next part's high value. This is how it works every single day in the market on all markets. It's strictly order flow. This is just strictly trading order flow. So what you could do is this. You can first find out if you're in a balanced or imbalanced market right away, right? Which I showed you how to do that this morning. So right now we're balanced. We're in between HVA and LVA according to the current market profile that I just inserted current price, right? And we're imbalanced on the long, this is the shorter Renko size. So we're balanced in a shorter Renko size. The larger 5-minute chart, the 2 to 4 hour windows, we're outside of it, which I'll show you in a second. So if we get above 41 breakout and retest, this market should run. What we can do is you can overlap this over top of our Renko par and find out whether your low volume nodes are. Your low volume nodes are reversal points. Where's the next low volume node? Here. we're right on it. We're right on low volume node. You want to see a buy signal right now, right on this low volume node. There's your buy signals. There's your important buy signals. Here off the low volume node, a system called right on it. We're developing one right now, right on it. And then if we break out, retest, and go. But what if we break out and don't retest and get back inside of it? Then guess what? You look for the first retracement up to 41. Look for a sell signal and short the market. It could do this too. Retest. Go down. All right, so replay this video. If you don't understand market profile, this is how you read order flow. It's layman's terms. Went over very, very simple how to read it. Either we are balanced, then we go up and down, up and down, up and down, up and down. Then we break out, it gets in balance, then it goes to the next control point. If we get outside of it, low value, we break out, the balanced, it goes to the next control point. If it gets back inside of a profile again, then what do? We look for it to retest and go back up. So replay this video. This will teach you how to do it. I'm going to be teaching this every single week. I think it's important that we understand how to look at market structure when you're doing these trades in the trade room. Because if you understand market structure, you understand why this is a big buy signal at 5:30 this morning. You understand why this is going to be a big buy signal right here off of the low volume node. Look at React off the low volume node. Look at React. This is not my opinion. It's not your opinion. It's order flow. Look how it came down to my zone in React off the low volume node. So this is what we need to understand. Now, we do have our 2 to 4 hour windows over here and the same thing. So we look for the same exact thing. We look for a breakout, retest, and it's going to try to get to the next value area. So where's the next value area? If it's going to hold above HVA today, this is where the market participation is. That's your next target to find fair value. So it's going to try to get to there to find fair value. Where's the next control point over here? Right here. It's going to try to get to here this today if it breaks below low value area for fair value. Here's the next control point. I missed this one, sorry. So that's the targets in the market for today. We know the exact targets where the market should gravitate towards because those are the fair value areas. Don't make it any more difficult than that. Okay? So we'll continue to go over this, but it's the same concept. Same concept every single day. Okay?